Hi, everyone. I'm Shruti Patel, Executive Vice President of Business Banking at US Bank. I'm thrilled to be here with Marcelis, who is a partner at Commerce Ventures. In 2021, US Bank made a strategic investment and is a limited partner at Commerce Ventures. Through these investments, we have gained strategic insights, early access to CV's portfolio of innovation companies. In addition to that, we have partnered across a number of the portfolio companies to accelerate product to market, enhance our customer experience, and deepen engagement. With that said, welcome Ice to the podcast.
I'm excited to be here.
Okay, let's get started. There are several venture capital firms which invest very broadly in financial services. How has Commerce Ventures developed its own approach and positioning in the marketplace, and how does your model support that positioning successfully?
Yeah, so when we started the firm in 2013, there were a couple things that were at the core of how we thought about investing that are still true today. So first, if you think about the name Commerce Ventures, we're not canonically fintech, right? We've always thought about the world in the context of, where do we see interesting points of intersection across retail, payments, banking, and insurance. And increasingly over the last, certainly decade, you've seen more of those points of intersection, obviously between retail and payments. Those worlds have collided. Your background at places like Shopify, I think, are great examples of that. And similarly, in the insurance and banking space, we've increasingly seen, as an example, entities that have been in, for example, life insurance push much more aggressively into things like wealth management. So for us, that orientation towards commerce as a sector focus has always been a little bit broader than fintech, with an understanding that payments and financial services broadly are fundamentally at the core of how consumers and businesses, interact, engage, grow, et cetera. So I'd say that's one really important point of positioning. The second, which is not necessarily different at a high level, but certainly if you think about how we've operationalized it, for us, there has always been a core focus within that sector on infrastructure. You mentioned this a little bit. So not exclusively, but a lot of our investments have focused on the underlying plumbing, the underlying infrastructure that large players can use. And part of that, and that I would say that focus has persisted over the last decade plus. As we thought about that, for us, looking at specific topics or specific themes that we consider from an investment point of view, for us, that orientation in terms of how do we look at themes, how do we prosecute themes, has always been one that's very analytically driven. And we could talk about how do we think about themes, how do we identify them, how do we prosecute them. But for us, having a strong sort of first principles view on what's happening in a category, more so than, okay, there's an interesting startup, but what's happening in the category from a secular point of view that makes that interesting. And what we saw is that if you have a focus on infrastructure in the sector, and if you take a very strong thematic approach towards evaluating these areas, very logically, the natural buyers, the natural demand side of the market do tend to be large companies like US Bank. One of the interesting things that we've obviously seen in the last decade around that is a little bit of what I call a false narrative, that fintech was not, and I think this has become clearer now, it's not so much about fintech, killing or breaking banks. I think where we sit today, it's much more sort of a recognition that whether it's banks or kind of large at-scale public fintech companies, there's inherently a sort of symbiosis or a mutual interdependency. And I think for us, it's been really interesting to see now, 12, 13 years later, in terms of how that's played out.
So I couldn't concur more. This whole concept around the convergence of fintechs and banks, I mean, we're certainly seeing it as at US Bank, given some of our strategic investments and our recent product releases. And I do agree that narrative has shifted significantly over the last few years in terms of actually how can fintechs benefit from the scale and distribution, and banks can benefit from the best-in-class product or better customer experience or just acceleration to market. I want to talk a little bit more about, how Commerce Ventures focuses in terms of investment, especially this concept of startup investment in companies which can partner well with banks at scale. What are some of your observations and the concepts you look at when you're investing in some of those companies, especially because I think that makes a majority of the Commerce Ventures portfolio?
Yeah, that's a great question. Where we typically invest, and this was our first check, tends to be earlier stage companies where there's a product, there's some revenue, but it's you're not really seeing that company scale yet, right? So you're talking about revenues, let's say on average, sub $3 million. So there's enough of a demand signal, early customers, early signal that the product's working, but it's certainly pre-scaling. So there's an early signal on product market fit, but it's still very, very early on in terms of how that company might be commercially activating. And one of the things that we spent a lot of time with US Bank, as a for instance, is looking at that specific category that the startup might be playing in. I mentioned earlier this sort of concept of thematic work. In a lot of cases, one of our partners, like the bank, will come to us and say, hey, we're really interested in X. And for us, that's an interesting prompt because if US Bank comes to us and says, hey, we're interested in X, one, obviously you're a very large buyer of technology, not from an M&A perspective, but from a procurement perspective. And two, in all likelihood, if US Bank says, hey, we're very interested in X, there's probably other banks that are at least thinking about it as well. So it's a really interesting signal of potential demand.
Yes.
So when we hear that, we go, oh, that's interesting, right? So that's one way that we then start thinking about and dimensionalizing, okay, what's happening around that topic or that theme or that category. Well, let's figure out what are the different models or different approaches for how venture-backed companies are starting to solve for that particular category. And then ultimately you back into, is there a specific company that's aligned to a model that we believe in? So we do that, consistently. We probably look at, call it 8 to 12 rooms a year, working with the bank on what's happening, what's the problem statement, where do we see friction with existing technology providers, and how can new venture-backed models potentially address or solve for those points of friction. The other way we look at it is, and I can give a couple of examples of both of these, is, you might see 5, 6 companies that are all doing kind of the same thing. Recently, an example of this would be like in sort of like the next generation ERP space, where we've seen, kind of at first sight, 4 or 5 companies that are all focused on next generation ERP. And you start thinking, well, why is that? Like, what is it about this moment in time that would suggest that the market is right for ERP disruption, which really hasn't happened in 20 years? So then you start thinking about, okay, well, what is it? Something about AI? Is it something around the TAM? Is it something around how these companies are positioning themselves in the market? So that to me is a good example of a theme we've recently looked at that was a little bit more bottom up. And then obviously a theme that we've looked at, with the bank as a for instance, if I think about things we've looked at recently, one was obviously around the sort of evolution of the commercial credit and private credit markets. Another one was around what's something we're looking at right now, the sort of evolution of tokenized deposits and what's sort of the position of the bank on that. So there's different ways we go about this, but fundamentally it's really working with the bank as a partner in validating at the front end, how do we think about the category, and on the back end, trying to figure out how do we drive activation from a commercial product point of view.
Yeah. And, I will add, we've certainly benefited from the insights you guys bring to us on categories and category specialization, which was one of the things you alluded earlier in the conversation, which is you're just not looking at an investment. You're looking at the entire sector, the entire category, and what are some of the strategies helping or how that sector is evolving. Last year, it was all about AI. This year, it's all about tokenized deposits and stable coins. So what are some of the emerging trends you're observing from your seat in Commerce Ventures, the startups you're talking to across both of those sectors, and anything else we should be keeping a note on?
I mean, those themes are still very much front and center. Now it's stablecoin meets AI. No, but all joking aside, I think there is AI is a meta theme, and it's a meta theme that plays out in a number of different ways. My personal belief is there is a level of hysteria about AI. And to some extent, there's maybe a level of also hysteria around sort of stable coins and tokenization. And there's when you see this sort of hysteria, you got to be careful because there's inherently materiality. There's a real change that's happening, but the change and where you see the materiality of that change also gets wrapped up in sort of a public narrative around disruption, and really trying to identify where do you see disruption is a really important piece of that. What we've seen, again, certainly on the bank side, is sort of at a very high level, two broad areas of AI disruption, and I'll talk about the second a little bit more specifically. The first, which we don't invest in, are these horizontal applications of AI, right? And we've all looked at this and seen this where, and this has accelerated very rapidly in the last 18 months, where, most large institutions, including obviously you guys, have adopted or implemented some version of ChatGPT or whatever, and leveraging those tools for everything from enhanced workforce productivity to, coding to engineering copilot, et cetera. So horizontal tools that are fundamentally changing the productivity of the organization at large. That's not a sector-specific or vertical-specific application. It's much broader than that. We don't invest in that, but it's obviously fundamentally changing the industry. The second, which is what we do invest in, is where we see vertical-specific applications of AI, and that is both early but obviously accelerating very rapidly. And within that space, there's a couple different things we've seen. The first is areas where AI is fundamentally changing a specific capability category. So, for example, we're investors in a company called Relku that's kind of rethinking mortgage servicing and doing that at, call it 50+% lower cost with 80+% higher efficiency than existing vendors in that space. Does that dramatically change the TAM of mortgage servicing? No, not at all.
Right.
But you can imagine as the bank, you're changing one vendor for a new vendor, bending the cost curve, improving efficiency, improving the experience. So that to me is a really good example of it's a pretty atomic thing, but you're leveraging AI, or that vendor is leveraging AI to actually change an outcome for the bank. That's very much a capability-oriented lens for how you can think about vendor improvement or kind of vendor replacement in certain capability areas. The second, which is still much, much earlier, is where you're actually changing the product structure, the experience for the client, whether that's consumer or business. And you're starting to see some of that, right? Everyone talks about agentic commerce, agentic payments. So you're seeing some of this starting to play out a little bit, but it's still very, very early on. But you can imagine a world where, a 22-year-old goes into ChatGPT and says, I'm 22, my FICO's X, my income is Y, I love travel. What are the right, 3 card products? You come back with the right 3 card products, and it's okay, apply for me. And that's a pretty easy thing to touch on. Imagine sort of taking that one step further, and I'm now, the bank is now sort of natively providing financial data via its own protocol server into an AI environment. So there's ways that AI is going to kind of continue to push the boundaries of where this experience goes, where the product and application layer goes from a financial services perspective. We're not there yet, but if it's one thing, we've obviously seen is that these announcements around AI, these announcements around payments and commerce are happening, it seems like every week. So I'm both nervous and excited to see where that goes in a year from now. And again, that to me is a meta theme. And similarly, we're spending a lot of time, like everybody else, around this concept of tokenization. For us, tokenization is as much about what are, again, the sort of fundamental problems of the financial system today, and how can tokenization solve or not solve that, right? And if you think about things like the securities environment in the United States or the payments environment in the United States, first principles, you would never have a trading market that, starts at 9:30 and ends at 3 p.m. Like, why do we do that? So there is this interesting question around, where can tokenization solve these things, but also with some level of practicality. And that's where I mean a little bit is like, where do you, and how do you sort out hype versus reality? We were talking to another senior person at the bank recently, and they put it well, which is, when I sit down with my clients, and this was on a commercial banking side or the commercial side of the bank, my client is doing, call it $500 million to $10 billion in revenue. When I sit down with that person, I'm not going to use the words tokenization or blockchain or stablecoin. It does not matter to that person, right? What matters is, have I provided a solution that is better from a liquidity management or cash management perspective that enables them to run their business faster. So you ultimately have to bring it down to what's the client need that you're solving, and how can fintech or how can, this wave of technology innovation change that. Maybe the last thing that I'll say, because this is something that's come up in the last sort of 2 days of Money 2020, if we think about sort of what happened in the 2-3 years starting at the pandemic and kind of coming out of the pandemic, you had both a rapid rise in valuations in fintech and more broadly. And at the same time, in some ways, it felt like fintech was in some ways, sort of a linear evolution. So there was lots of things to be excited by, but it felt like it was a linear change in terms of what was happening. It feels like today, and for the last 12 months, you're in a different environment where the valuations are probably still crazy in a lot of cases, but it feels like we're now in an exponential step function change versus a linear step function change. It'll be really interesting to see how that plays out.
Got it. Talk to us a little bit about healthcare. It's very near and dear to US Bank. You have been close to some of the strategic investments we have made recently, including acquisitions. We have a broad spectrum of offerings in the marketplace. What are some of the trends we should take note of as we continue to deepen the healthcare sector?
So we've been looking at sort of this intersection of financial services and healthcare. It's probably going back to 2018 is when I remember we first started really diving deep on it. And I think part of this is a technology question, part of this is an operating model question. On the technology side, one of the interesting things that we've seen, and this isn't specific to healthcare, but we've certainly seen it play out in healthcare, is a lot of the vertical specific platforms that we've seen don't necessarily have financial services natively incorporated, right? The problem that I'm trying to solve for is a vertical specific workflow problem. And as for instance, we're investors in a company called Zentis. They're working with US Bank in the dental space, specifically focused on kind of aspects of dental RCM. And to me, Zentis is a good example of this, where you're solving for a fundamental set of pain points around kind of billing and payments and collections in the kind of the dental market, which is a large market, obviously. And the pain point is really, or kind of the value proposition is really around solving that. But it's not necessarily, and that company's not necessarily focused on, hey, can we natively solve for lending and payments and, credit and all of these other things. So you think about that, and that to me is a really interesting example of the type of opportunity for US Bank, which is, it's a technology partner that's not actually trying to own necessarily the financial product. Can you actually then work with that partner to, forget even expanding it to their distribution, but within the bank's existing distribution, you can embed that while still owning the financial products and financial experiences, or embed the bank's products inside that platform to kind of push it further. And that sort of symbiosis, sort of synergy, if you will, between the bank extending its products into a partner kind of software platform is a really, really interesting sort of evolution of how that could go. I'd say more broadly in healthcare, there's obviously some things or some questions right now around the sort of legislative environment around the Affordable Care Act and whatnot. But I'd say, in general, healthcare is just becoming more unaffordable across the board. The unaffordability challenge is a challenge for patients, right? I saw the other day, I think it was the average American healthcare is now spending $27,000 a year. That's crazy, right? So you have the fundamental affordability challenge for patients. For payers, it's inherently more complex, and more of the burden from a payment and collections perspective is now being pushed onto providers. So if you think about those three things, let's put the payers aside for a second. If you think about the provider and patient problem statement, this is only getting worse, right? Even since we've looked at it in 2018, it's only getting worse. So if you think about, well, what can the bank fundamentally provide or do around that problem statement? To me, financial services is at the core of this problem, right? How do you make it more affordable? How do you extend credit? How do you provide solutions to the provider and to the patient that enable the provider? In a lot of these cases, the provider is a small business, right? How do you enable that, that small medical practice, that small dentist to manage their business better, to collect faster, but do it in a way that's also patient friendly, to manage their business operations better. So to me, it's a really, really important problem that's just become bigger. And that, to me and to us, there's a host of technology solutions that are focused on that are continuing to emerge, focused on that question of affordability, that question around business management and workflow management. Of course, there's also an operating model challenge here, which is there's a huge opportunity, at least where we sit, for the bank to go to market in a very holistic way. I mean, the bank obviously has an acquiring business. You have products.
Banking products.
You've got investment banking. You've got commercial. So you've got a host of products. You've got a host of solutions. There's an opportunity to bring all of that together and say, hey, here's a coordinated, cohesive, holistic value proposition for you as the provider that brings all of these things together as one integrated thing, as opposed to, thinking about that in a much more siloed way. And technology should enable that, but it's not going to solve for that on its own.
Yeah, what's really interesting is a lot of what you said really resonates with what we are hearing from our customers as well. We started off with obviously offering bank accounts and operating lines of credit because these are so important for healthcare providers. But as we work with them more and more and we move up market, a lot of the ask is around how can you help us with better, seamless, frictionless payments? How can you integrate into our patient care, billing, invoicing, and really offer that spectrum of digital services just outside of bank accounts and operating lines of credit and treasury? You have been very close to some of the recent fintech partnerships we have made across the enterprise, including business banking. Banks are leveraging more and more capabilities from fintechs at scale and distribution. What are some of the lessons you would have? What can banks do to work better with fintechs, and as they're choosing their fintech partners, some of the important attributes to look for?
It's a great question. And, we've been doing this now for, again, more than a decade. It's a lot of what I personally spend my time looking at is how do we ultimately drive value to, with some of our core partners like the bank, but also how do we translate that to value, not just to our portfolio, but to venture-backed companies more generally. And banks in general have made a lot of progress and have evolved in terms of how they think about the world, certainly in the last decade, probably even in the last 3 to 5 years. Some, I would say, core organizational lessons learned and challenges, I would say still challenges remain. Lessons learned, I think, are pretty interesting, right? So some of these are a little bit of sort of truisms, but it's really important to align the organizational and kind of functional components to be able to implement these things. And that's not just product, but it's things like InfoSec, it's third-party risk management, it's procurement. And, there's sort of, again, this sort of adage or truism that, nothing kills a startup faster than trying to do a deal with a big bank. So it's also like when in a life cycle of a startup doesn't make sense, but it's a truism because it's also not necessarily the reality, right?
Yes.
It's you can actually, big banks can and have effectively shown an ability to partner with early stage startups. What we typically find that works well is you have to identify something that's discrete in terms of, okay, there's a very defined problem statement that we're trying to solve for, where there's clarity around what's required from the bank's perspective. There's alignment from a budget and capital perspective. There's alignment in terms of the resources on the bank side to integrate that. And there's alignment in terms of how do you effectively fast track that from a, again, procurement implementation point of view, which again, legal, InfoSec, third-party risk management, all these sort of functional components to that. And if you do that well, you have something that's atomic, that's defined. In an ideal scenario, it's even as specific as we're using vendor X today. We want to replace vendor X for something else. Here are the specific requirements that vendor X is not doing well that we can replace that thing with. And it might seem like very, very sort of like, again, atomic or in the weeds, but the more specific you are, the easier it is to actually work with certainly earlier stage companies because there's a very specific box that you can address or that you can look to solve for. And that to me is a core part of where we see banks either being very effective or very ineffective, right? You can spend a lot of cycles, a lot of time on broad-based exploration, points, POCs, whatever else, which to some extent has a purpose. But if you're really looking to commercialize something, and I think you've been great in this, having a strong executive champion and stakeholder, having the right set of internal resource alignment, and having a clearly defined problem statement of budget against that is, I would say, the sort of table stakes foundation to being able to do this well.
Yeah, well, thank you. In closing it out, I will certainly say we've benefited a lot from Commerce Ventures. The sector expertise, the early access to trends, and the companies, the innovation companies you introduce us, and across the enterprise, we've had some really valuable learnings. Any closing remarks on your end?
No, similarly, we've really enjoyed the partnership with the bank. I never know what I'm allowed to say in these podcasts or not. So, there's by my count, there's half a dozen of our portfolio companies that are working at the bank in a true commercial deployed capacity today. So that's obviously really exciting for us. And, I think the bank has shown, I would say, real leadership in, doing a number of these things, not just from a partnership perspective, but even from an M&A perspective. I think about the acquisitions of companies like Bento and Talik. So to me, the bank is a great example of how do you effectively partner with fintech? How do you do that from a capability perspective of companies like Socure? How do you do that from a distribution perspective with companies like Zentist? And how do you do it through M&A, where M&A makes sense in the case of, companies like Talik? So it's been a great partnership. We obviously think about this as a long-term partnership and look forward to doing a lot more together.
As do we. Well, thank you for joining us. That's it for now. Thanks, everyone.